Hi, my name is Matthew Klein. I'm the founder of Collective 2. We've recently launched a series of videos highlighting interviews with strategy managers on the Collective 2 platform. And you are about to watch a really interesting interview conducted by my colleague Roman with a strategy manager named Tony. He's a computer programmer and he runs one of the more successful strategies on the Collective 2 platform, which you can use to follow along in your regular brokerage account. But before we get to today's interview, I just want to remind anyone who's watching this or listening to the audio that the results you're about to see for Tony's strategy and all strategies on Collective 2 are hypothetical. And I will provide a link in this video where you can go via the World Wide Web to look at what that means. And just remember that using Collective 2 is risky, and you can lose money if things don't go well or the strategy doesn't perform well. So you should always use what is called risk capital, assuming you have risk capital, and that's capital that you can afford to lose. The results you're going to see are really good, but it doesn't mean that they're going to continue to be good because we can't guarantee how the markets will perform. And if we could guarantee how the markets would perform, I wouldn't be sitting in this room making this video, right? I'd be, on my speedboat somewhere in Lake Tahoe. So, be realistic. But this is an interesting interview, and I think Collective 2 is awesome. So for the right people, it's worth checking out. Anyway, enjoy Roman's interview with strategy manager Tony. I'll hand it over to Roman now.
Welcome to the Collective 2 channel. My name is Roman, and this is one of our first videos in a series of videos/podcasts where we interview strategy managers who use the Collective 2 platform. Today's interview is with a strategy manager named Tony. Tony chose to stay anonymous, which is why he is not using his video camera today. Before we get to today's interview, for those of you who don't know about Collective 2, it is an organization that is looking to replace the hedge fund industry with a single piece of very intuitive and transparent software. All right, on to today's interview with Tony. I hope you guys enjoy it. How you doing today, Tony?
Hi, Roman. I'm good.
Awesome.
Market just closed, so
so now we're free to go about our day, right?
Yeah.
So as you can see, we have one of Tony's strategies being screen shared right now. Tony, why don't you tell us a little bit about your background?
So my background is actually in computer science. So I graduated with a CS degree from Berkeley, and I'm currently working in the software field as a developer. But I'm currently taking a master's in data science because my interest is in machine learning and artificial intelligence. It's basically using a machine to find patterns with data that you provide the machine, and the machine will provide a decision, either long or short, in a way that humans can't.
Mm-hmm.
And in terms of stocks, I've been trading stocks for about 20 years, doing stocks, options, bonds, and about 2 years ago started algorithmically trading using AI. Once it seemed like it was getting successful, that's when I started the system on C2. Before that, I was also a subscriber to systems on C2.
And why did you choose to go with C2?
I actually looked at other sites, and C2 seems to be, it has a lot of strategies, a lot of varied strategies. It provides statistics. And I really like how strategy leaders can have a trade own system badge, so you know that they're actually trading their system. Mm-hmm. And the hypothetical results are based on actual auto trades from subscribers. Mm-hmm. I like features like that.
Yeah, absolutely. I like that it's extremely transparent, and it's kind of a way to create a hypothetical track record of actual trade executions. So what about you? You mentioned that you, and of course, as we can all see, your strategies are very popular on C2. Have you done anything to promote your strategies, or the investors sort of gravitate on their own to your strategies?
I'd say it's both.
Mhm.
Of course, having a good track record is the most important thing, but there's a forum on C2. So when I first created the strategies, I made a post about it in the forum
Mhm.
and offered a discount for the first month. That's always one way to own it.
Oh, that's awesome. I actually hadn't thought of that as a possibility, but thanks for letting us know and bringing that up. Now, in terms of your strategies, could you give us like a basic overview of how you, for example, this TQQQ swing strategy works, without divulging too much of the secret sauce, so to speak?
Yeah. Okay. So there's four strategies. So this is the main one. This is um, also the main one that where I have most of my personal money in. Um, it uses AI to make a decision. So it decides to be long TQQQ, which is a triple leverage ETF that tracks the Nasdaq, or short TQQQ by buying SQQQ.
Hmm.
So it's actually only ever long, but it goes short by buying an inverse ETF.
Yeah.
This is the equity graph of the strategy. So if you put the equity chart of TQQQ, it would actually be less than this and more volatile. So
Hmm.
the goal of the strategy is to beat buy and hold TQQQ, because of course, if you can beat the strategy by just buying TQQQ and holding it, there's no reason to subscribe to
Right.
this.
Hmm.
So one goal of the AI is to beat the index, which is TQQQ, and also not necessarily just to beat it, but to be less volatile. So as you can see, it's I mean, it is a volatile um, strategy, but it's less so than if you just held TQQQ.
Hmm.
Um, yeah, so that's basically the strategy in a nutshell. And you can see most of the time, like buys TQQ and sells it, and then buys and sells it, and then sometimes it goes short. And there's also another strategy that I have that only trades TQQ. It doesn't go short. And this strategy also doesn't it avoids making too many day trades to avoid pattern day trading violations.
Hmm.
This is for accounts that are under 25K. I also
Okay.
tried running the AI with SOXL, and that worked pretty well. But lately for this year, SOXL has been very unpredictable. The AI's been having issues predicting it.
Hmm.
So it's not like doing horrible, but it's just not, doing great this year.
Hmm.
Um, and also there's another strategy, SOXL intraday, that tries to still get the advantages of SOXL, which is a triple leverage semiconductor ETF,
Hmm.
but avoiding holding it overnight. And that seems to be doing okay, but it's of course volatile too, because SOXL itself is pretty volatile. So
Hmm.
yeah, that's a summary of the
Hmm.
strategies and methods.
So did you build your AI algorithms from scratch?
Yeah, the algorithms aren't using a any off the shelf like stock software, so it's done in Python, and
Okay.
the AI models themselves are using libraries. I'm not recreating
Right.
those, but the models themselves are
Hmm.
yeah, are stuff that I came up with.
And do those models train using historical data?
Yeah. So
Okay.
so
And
it
how far
uses
back approximately for that training set do you use?
I don't use the entire history. Well, I don't want to divulge exactly how far back it uses, but
Sure.
I found an optimal, like you can use a last year's training date
Hmm.
performance to train for the future, and that might react better to the short term. Or if you use
Right.
the
Yeah.
last 10 years, you will react more to like big crashes that might have happened in the last 10 years.
Right.
Or if you only train with 1 year, you might miss those situations.
Hmm.
But if you train the last 10 years, it might not work as well with um, more, how the market is currently doing because
Hmm.
you trained the last 10 years. So the way it does it is a little more complex. The look back period and how it combines that the advantages of a shorter look back and a longer look back. That's all stuff that's been tuned.
Awesome. Did you have any advice for perhaps newer strategy managers or people who are looking to follow a similar path?
Yeah, I'd say just go for it. I actually started this system on C2. Here it says it started in March, but actually started in January, and it didn't do as well. And then I redid the AI to be better, and then
Mhm.
reset the system. So that's one thing with C2 is you can make a test system to see how you would do before you
Mhm.
actually start your system for real.
Mhm.
Um, Another thing I would suggest is some systems, they when they lose, they make bigger bets to try to make up the loss. Don't do that. Just try to be consistent, but also of course change with the market.
So you're always adapting your algorithms?
Yeah. What one thing with algorithms is, the market's constantly changing. So yeah, when I first made the system, I thought if I didn't use AI, maybe I use a system. So this applies to any strategy, like whatever method you came up with. When times change, you can still stay with your overall strategy, but you might have to tweak things slightly to adjust for like a bear market, or if the market actually just changes.
Did you want to talk about how you would manage or how you have managed your drawdowns in the past?
Yeah, a lot of times, so a suggestion for strategy managers is when you have a drawdown
Mhm.
to maintain communication with subscribers or people simulating a strategy that
Okay.
potentially could be subscribers, to explain what happened, just
Mhm.
basically to let people know that you're on top of things and you're watching the strategy and not just like
Mhm.
um, not
Letting
not
it
actively
run.
managing it. Yeah, yeah, and also drawdowns are inevitable, so
Mhm.
don't get discouraged when you have a drawdown. If your system has alpha, if it has potential, it's going to eventually turn around.
Mhm.
Drawdowns are just a part of being a stock trader.
Definitely. Definitely. Awesome. Thanks for that little piece of advice. It's very useful for sure. I really appreciate you sharing your strategy and some valuable information. And I think that just about does it for the time we have today. So, once again, thank you so much, Tony. And hopefully, we'll be hearing from you in the future. And I'm certainly going to be keeping track of your strategies on C2 to see how they progress in the future. And thanks to everybody for watching. And we'll see you in the next interview.
Okay, thanks.
All right.
Good talking to you, Roman.
All right. Take it easy, Tony.